Well, okay, my beautiful friends, here we go. We got through another week in this freak show. But let me tell you something. This freak show, as hard as it may be to believe, just got freakier. We got some incredible information here. Nothing that's going to surprise you. But, hold that thought. We'll get to this. It's pretty out there. So, yes, post-market wrap-up, let's talk. We are officially, are you ready? Back in bear market territory with regard to the S&P 500. The stock market today did fall under some pressure. Nothing major, but just enough to push the S&P 500 back into bear market territory. All right. 10-year yield not doing too much today. 3.45. The dollar actually weakened a little bit. It was stronger earlier. Stocks were down a lot harder. Yes, we finished lower across the board, but well off of the lows here. And it's the debt market. It's the action in the 10-year yield. It's the dollar here. And they're the driving forces behind what we are seeing. I don't know. The economy, it's dead. It's just over. We know that. We keep hearing about this. It's just not going to stop. Now, before we get over to the market, so we understand that, Goldman Sachs, the Wall Street Superbank, is warning of a significant drop here imminently in the stock market. Well, that got backed up today by Bank of America. Same exact narrative. They're warning of a stock market drop imminently. Okay. Bank of America also, listen to this, okay? Try not to fall out of your chair. Bank of America is warning that rising inflation, are you ready? It's not over. Really? You mean it's not transitory? It's not temporary. It's certainly not peaking. Oh, and it's going to continue. Oh, that's interesting. Because we also heard the same thing again from the International Mafia Fund today, IMF. Now, this is what the IMF is saying. Are you ready? Inflation continues to rise. Oh, wow. What a shocker. And they're also saying that global productivity is also falling off of a cliff. Now, what would you expect when you have a global economy that continues to contract? Oh, but you mean we're not booming and things aren't absolutely fantastic? Let's talk about that real quick. So what I alluded to earlier that I said was going to be very interesting to you. So we got some whistleblowers here, economists who are coming out, saying, hold on a minute. Something is wrong. Now listen to what they're saying. Economists, these whistleblower economists, are saying that the economic numbers are not adding up. Quote, there are profound discrepancies between what is being reported in the labor market and what's actually happening. One of these whistleblower economists is actually saying that the White House is double counting jobs added. They're double counting jobs added. Now, me and you, we already don't trust the data at all. This makes me trust it even less. I mean, look, it's all fake. You know that. Nothing has even the slightest resemblance of truth anymore. It's all propaganda, distractions, distortions of the truth to the highest possible order. And do you really think that's going to stop anytime soon? Let me ask you, who's going to be held to account here for fake data being fist-fed to you, me, and everybody else? How about nobody at all? Oh, no, especially not the White House, who's double counting jobs being added. Now, look, our economy, as you well know, it's just done. Here in the United States and around the world, it's about to get monumentally worse. Don't listen to me, okay? Listen to now the International Mafia Fund or any There's so many institutions now coming out saying, hold on a second, things are not as lovely as, the propaganda ministry is trying to convince you that it is. And you know the story behind this. For how many years have I told you that what they do is try to convince you that what you're seeing with your own lovely eyes is not real. No. That's not what's happening. This is what's happening. And they're going to fake the data. They're going to tell you, to look in places where you shouldn't be looking so they can do other things behind your back. And this is all part of the situation here where we're at, people. Anyway, going back over to this market here today. So yes, we are officially back in bear market territory. What does it mean? It's going to get worse? Absolutely could. But we don't have to guess, you and me. There's no guesswork. If, for example, we see the 10-year yield continue to rise, the yield curve continue to invert further, dollar getting stronger, what do you expect that the stock market is going to do? Hello? It's going to go lower. If we see some normalization or stabilization in global debt markets, let's say, for example, we stop seeing bond yields rise, and we get a weakening of the U.S. dollar on relative terms, market's going to go up. I mean, all of this, you know this better than anybody, and that's what I love. I love sitting here and explaining these things to people in a way that they can get it, okay? Because you're never going to hear this stuff anywhere else. No one's going to teach it to you. You got to kind of search for this stuff, and it's not in your face, although it is hidden in plain sight like everything else. But just, forget about warnings from like Goldman Sachs and warnings from Bank of America. Okay, we've been hearing warnings for I don't know how long, and the market seems to be almost invincible. Yes, we're back in bear market territory, 20% off of the all-time high with regard to the S&P 500, but what does that mean in the grand scheme of things? Markets go up, markets go down, 20% drop in any major indice is normal. This is normal market activity. Okay, what is not normal is the complete disconnect between what the stock market continues to do and where our economy is. The gap here, even though we are down 20% off the high of the S&P 500, has no business being here at all. Zero. But the market's being propped up. And I'm going to give you one guess as to who's doing it. Duh. I think we all have a very good handle on that. So let us move forward. Gold and silver did reverse, put on gains today. Decent. Cryptocurrencies under some pressure here. Crude oil. I forgot to look at crude today. Energy was down though. Whatever. It doesn't even really matter, honestly. But that's the story. That's where we stand right now. So with that said, I don't know really what else we can talk about here other than how lovely it is to be here together talking about this stuff. I like it. I enjoy it. I really enjoy being here. All right, look. So I'm going to kind of end this video. It's kind of a short one today. But I do want to hear from you as always. What do you think about the warnings we're getting? Why is no one telling you what you need to look for besides me? And already. Watch the 10-year yield. Watch global bond yields. Better yet, watch the MMRI. Again, free to anybody. Mannarino Market Risk Indicator. Link in the description of this video. Look, what I'm trying to do here is strip out as much of the guesswork as possible. Look, nothing is written in stone. What we do know is things are changing here. Are central banks going to get in here and start buying more debt? I've been saying yes for quite a while, and I've been wrong. I've been wrong on this. Bond yields continue to rise. Instability here in the debt market is clearly in our face, and the market just doesn't like it. So, look, where do you stand right now on that? Do you believe central banks are going to do more? Because most of you seem to agree with me on this one, but as of yet, we haven't seen it. We're still continuing to see this phenomenon occur with bond yields rising as debt is selling off. And it's a big issue with liquidity. And it's not just Greg Mannarino talking about this liquidity problem. You got the International Mafia Fund. You got big banks talking about it. You got the mainstream media talking about it. You got the SEC talking about it. So, it's out there. there's a problem and it's dangerous. So let's see what happens. Here's my opinion. All right, I'm going to throw it out here. It appears to me that at least the market believes that central banks are going to do more. But look, the market has been known to be wrong. Clearly, I've gotten this wrong too. I expected more action, or action to be taken sooner, with regard to trying to stabilize the debt market. Maybe central banks are ready to pull the plug. Maybe they're going to let this thing implode. I don't know, but I want to hear from you. What do you think? All right, look, that's it, people. You will see me Sunday for my markets to look ahead. I'm going to ponder all this, put it together, come up with whatever I come up with at that point here, the most likely outcomes. We can at least try to make sense of it. But with that said, bring it in. Bring it in, bring it in, bring it in. Bring it in. No one's looking. You ready? Love each other. Care about each other. Be charitable. Have a great weekend. Enjoy yourselves. And, well, I'll see you Sunday.